Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, August 26th. Hey, it's my last day up here in Napa area. Anyways, we're taking my son up here to visit the parents for a couple weeks here, and he starts back to school tomorrow, so get back to the routine. Anyways, hey, we do got a bunch of economic news to jump into today. We're going to start off with the durable goods orders for the month of July. So back in June, we had a 2.7% increase in the durable goods orders. The forecast was supposed to go up to 12.6, and it jumped all the way to 22.6. Now, we got the core capital equipment orders, which is basically strip out the big ticket items like the big industrial, like airplanes and automobiles and transportation. And we had a 5.4 back in June, and it came at negative a half a percent. This is primarily because a big order of airplanes from Boeing kind of obscured the numbers, so it looked like it went up 22.6. But in reality, if you take that number out, it was actually a negative a half a percent for the month of July. So not as good as we initially thought, and that kind of indicates that it kind of shows you how much some of these numbers, especially the big ticket items, can obscure the numbers. So that's why we kind of look at these core numbers here. Next ticket on the docket it would be the Case-Shiller home prices. So back in June or back in May rather, we had a 9.4 year-over-year forecast and or year-over-year appreciation. Now appreciation went up 8.1 for this June, uh, and basically it shows you the moderation of the prices, how much they're going up. Last year, remember, again like double digits. This year, home prices are going up, but just not as dramatically as we were seeing last year. FHA, another index for home prices, we had 5.4 back in May, and it came in at 5.2 for the month of June. So again, these are year over year. So from June to June 2013 to 2014, these are what the price increases are at. So a little bit more of a moderate pace compared to what was last year. Consumer confidence for the month of August, we had a 91.9 on the ratings. So we were supposed to dip down to 88.5, and it actually went up. So this is a lot of this has been contributed towards the jobs, that there's some improvement in the jobs, so people are feeling a little bit more confident when things are moving in terms of the jobs. So uh, we'll keep an eye on that. So then, as a result, stock market's up. So some decent numbers we got in there. Stock market's happy. They're still talking about the merger acquisitions, like Burger King and Tim Hortons, stuff like that. So those are kind of being brought to attention. But mostly what we just talked about, the economic data that came out, is what's been kind of discussed. And home prices going up, confidence going up. So those are all being attributed to the stock market and its current increase. Bond market today, we're actually up a little bit too. So we're up. We start off at 102.21, and then we've been kind of fluctuating between 102.30 or 21 and 102.30 today. So we're actually up a little bit currently from where we left off yesterday. So it definitely is a little bit of pricing. We seem to have this trend upwards, as we could see, um, as we've been kind of riding this line here. But be careful. We are at the top edge of it. Tomorrow we don't have any economic data to report, so be cautious. Could be geopolitical things that come out, or maybe something along the lines of stocks that could be kind of moving along. Maybe some more merger acquisitions, or maybe some earnings reports and such. They'll come out. But Thursday will be a big day because we'll have the GDP, we'll have the weekly jobless numbers coming out on Thursday. All right, folks, you guys have a wonderful day. Thanks for watching, and be back to norm tomorrow. I'll be back and hopefully have a little bit better recordings for you. Okay? Have a good day. Thanks for watching.